to be honest.
Dude, that's the thing. Like, so I was trying to explain this to someone because they think currencies is like a scam, and the whole scam part about it is that it's such a low barrier to entry that if you go on Instagram and YouTube, people are gonna market themselves towards currencies because it's so easy. You don't need a $25,000 account like on big stock brokerages.
Yeah.
But no, if you can trade currencies, you can literally trade anything. Like,
Yeah.
it applies to all
That-
markets.
That's what I liked about it. I like the aspect that I could sit here, I could put $100, and I could put 1,000, and at least like the volatility of it. Like I know like the forex pairs like move up and down, but like the
Mhm.
pair isn't going to go to zero. The pair isn't going to skyrocket to
Yeah.
$10. Like there's a very small range and a window, so it's like I feel like it's a lot more guaranteed than like stocks and everything, just because that stuff can shit in value or just go up super high. And I don't know, a lot more variables than that. I feel like.
Like, it is the most manipulated market. That's why you see all these big wicks and like destroying zones. But
Yeah.
it's the same thing happening every single day in reality.
Mhm.
Like, dude, I just once you learn currencies, there's no point in going back to stocks. You're like,
I'm trying to learn actually both. I really want to learn forex first, and then I want to just learn how to invest, just for like a good long term thing to do for myself. And then
yeah,
I want to try and like learn options.
that's exactly what I'm trying to do. I want to get better at trading because like I'm always learning this. Like I want to get better at making most return with the minimum with minimizing risk. Like
Yeah.
I want good risk to reward ratios and stuff, and then slowly compound my account and put that into a dividend account.
Hmm.
Definitely, because like trading, people say it's gambling, dude. It's all risk management. It's all risk.
Yeah. I completely agree because the people are like, oh my God, you're going to lose $1 million doing that. It's because you did no proper risk management. Of course, you lost $1 million.
If
You're
you put
stupid.
down, yeah, if you put down $1 million, expect to lose.
Exactly. And that's what I try. Like, I'll tell people about that a lot. It's like, oh my God, isn't that risky? This and that. I'm like, bro, if the most I'm comfortable losing on one position is $85, that's all the risk I have on one position. Like, you got to understand, like, I'm not risking my whole account and my house to go do this one trade.
And it's like once you accept that, there's no emotional judgment. You can see clearly what price is doing.
Exactly.
So do you
It's like
trade?
I'll fuck around with the like the paper money and stuff, but honestly, I haven't, since it's like fake money. I have like a hard time like really dedicating like a good amount of time to it because it's like,
Ten
yeah,
hours.
like it's rewarding, but I'm not getting like that real monetary like reward. So I'm just like, like I could be doing this right now, and
Definitely, even doing like $100 account or something small, something
that
like
might be what I need to do.
it definitely makes it seem more real
Okay.
because it's like you have money, like it's real. It's not like, oh, you know that,
I have $100,000 in a fake account. Like I
yeah,
feel nothing from that.
like you know that you're never gonna be affected by losing that. Like some people, like
Yeah.
even I was affected by losing $100 account because it's like it's not just the monetary aspect. Because $100 is like nothing nowadays if you have like a
Mhm.
job, but just that losing the consistency in $100, that's what like affects people more
Yeah.
than the money. So any kind of money is good to start out with, honestly.
Yeah. I have an account with like 50 on it. I'll probably just start fucking around with that
But
just
definitely,
to see what percent gain I can make each month. Because fuck it.
yeah. But before that, that's why I like the simulator because if you're profitable on demo and like you can create a good equity curve,
Yeah.
that's when you know it's ready to start live.
Hmm.
So there's no need to rush it anyways.
What kind of platform do you use for trading?
Yeah. So this you can see the screen, right? Like it's
Yeah.
clear. Yeah. So this is MetaTrader. I also want to show you guys another charting software. I mean, it's once. Yeah, we got like 10 more minutes. So I'll just show you some other stuff real quick. Um,
Sure.
the two biggest things I use, actually, I'm gonna write this down for the workshop, is MetaTrader. Like this is the platform.
Yeah.
Talk about brokerages later, but then this website is probably my favorite charting website. You can literally look at whoa.
Oh, I love Trading View.
Yeah, trading view.
Love it.
You can't go wrong with trading view.
Yeah, dude. The ways you can just mess around with the charts on there is unmatched.
Dude, yeah. It's like it's clear. I like looking at charts better on TradingView than MetaTrader because you can scroll and adjust everything. It's pretty
The
dope.
one thing I don't like about MetaTrader is really just how like it looks. Like it really just looks like choppy and just old to me.
It's old school. It's old, man.
That's the one thing I don't like about it, man. I want that new modern look. Like I look at MetaTrader and I'm like, the hell am I gonna do with this?
Like this makes sense to me. This looks clean.
Yeah, I like that.
Yo, let's look at Bitcoin. I want to see what Bitcoin's doing. I used to trade Bitcoin like the on this weird exchange.
Hmm.
Dude, this is a beast of a pair.
Oh my boy, he invests in forex. He actually has some money in mine. He's had a pretty good return on it.
Dude,
He only invests in Bitcoin and US 30. This is shit.
was he trading on a forex broker or
Yeah, I forgot what fucking broker he uses. He told me. I think he uses starts with an H.
Hugo's Way?
Hugo's Way. Yeah,
Oh, dude, I know that brokerage. I'm pretty sure they B-book, but I mean they're good. Sells on.
yeah. He's a little slow on his withdrawals. I'm not gonna lie. Like he always takes a long fucking time, but
Yeah.
the dude's good at what he does. I'm not gonna lie. He turned my 2000 like 4.6 in like 4 months. So I was like, bet.
Dude, that's beautiful. That's all because then if you do that over and over again, that's all it
Yeah.
takes.
Yeah, I took out my $2,000 investment and I'm just letting him sit with the rest. And
Chilling.
I was thinking of using the money that he makes to like do my forex shit. So
Yeah.
like when that account's at like five, I'll be like, bro, throw me two, and I'm
There
just gonna
you
use that too to
go.
just
You got
play
two
with.
sources of income right there. That's dope,
Yep.
dude. Yeah, man. So do you trade stocks, currencies, or what do you trade?
I've honestly just been like just diving in on just learning everything like that I can. Forex was like the really the main thing I want to learn because I really like the consistency of it. I think you if you like really can like learn a pair or two on there, like you could really like master that shit. And
Yeah,
I
like,
really like that. So
mm-hmm.
like Forex is really what I want to do, but I'm also learning like stock market stuff just because I find it very fun and interesting anyways. And
You're
I
no,
do want to get into options at some
you're
point.
getting to
So
the rabbit hole, man. That's the underground world of trading, markets, all that.
oh yeah.
Dude, I feel that. I've looked at options. That scares me. I don't know
Yeah.
anything about options, man. I think
Yeah,
they used to have
I've been
options.
looking at that for a while, and it looks scary, but it looks like so much fun. Like once you get the hang of it, like I don't know.
All I know
All
is that
like I know it's not a game, but it's like it just looks like a fun just game that you make money on, you know?
I just don't understand the whole positions and options. Like
Yeah,
you can trade
yeah,
out of the money, like straddles and all these. It's I mean like you literally have options. I guess that's why they call it that. But it's just here you just buy and sell. Like it seems so much simpler.
I agree.
I mean you can also hedge as well, but I don't really get into hedging.
No, I don't have near enough money to start hedging my shit. I feel like no point.
Yeah, some people do like these weird hedging strategies where they'll take both sides and then whichever one has like the bigger move potential based on like say you take a buy and a sell, right? You're technically hedged because you're taking both sides.
Yeah.
If price moves up, but the structure looks like it's gonna keep going, you close your sells and then your buys will make up for that sell loss or something like that. Like it's
Yeah, doing that the stupid like spread calls. Fuck that.
yeah, it's I mean, I feel like there's something to it, but at the end of the day, like that's not my
There's this one like group. I've been following this group on Instagram for like over a year, and honestly, like super knowledgeable. Like I've actually learned a good bit from their page. It's called Option Swing, and they do like their own little like course now. And I've been like, fuck it, like I just want to sign up for their little beginner course, just see if I can learn anything. Because I've just read a lot of good reviews, and they sell out in 3 4 minutes every single day. Like by the time they enroll in 4 minutes, they're sold out of like 60 positions. And I keep missing it, man, because I want to learn how to do this option shit. And if I just have a good basis like that to start off with, I'll be fine.
There's definitely free options.
Oh yeah.
Let me see if I can find it. I used to know
I,
this.
I really just want this guy in particular, but I do need some free option stuff as well.
You
It's
know, it's
only
like
like $300. I'm not even that worried about it. Only course I'd probably ever buy.
I was never really big on courses. Like I just learned everything for free.
Yeah, this would be the only one I really want to buy. Everything else, I think you can learn online yourself. Nothing YouTube can't really teach you.
Dude, YouTube is like school is basically YouTube right now.
Literally, teachers just post their own YouTube videos on their Canvas.
I had one class that was in person, and then they canceled it, and now all my classes are Zoom, which is ridiculous.
I only have one teacher that makes me go to Zoom classes.
Yeah,
Everything else is like completely optional or just like office hours. It's like I literally just do nothing but just study and fuck around.
dude, I wonder how long this is gonna go on for, man. This is crazy world.
Yeah, honestly, I'm expecting like maybe it ends like next semester. Like maybe that's when they start really letting in a lot more classes for in person. And then like I feel like around February, like just stuff will be back to normal. I mean, it's just a random arbitrary guess, but still, like I think February would be a solid time.
I feel like by the time elections come, we're gonna know more about this whole thing, dude. People just
Completely.
so much on Instagram right now, so much on news, so much on social media. Everything is like going crazy, man.
That's going to be the main thing though about the election is what are we doing about this shutdown and coronavirus? Like that's going to have to get dealt with immediately from whoever.
The markets are reacting really funny. That's all I know.
I haven't been looking at that to see how they've been reacting. What's your little analysis?
It's funny because I did this whole I compared this. I'll show you if I can find it. SPX is the S&P 500. So if I can get a good view on this. So this is the index, right?
Yeah.
I mean, yeah, this is the S&P 500. So what happened? Markets came down right here, March 20th. So that means all the people owning stocks, whatever, the big money, sold out into cash. So
Yeah.
this is March 20th, right? If you go to DXY, which is the dollar index, it compares the dollar against all the other currency pairs.
Okay.
March 20th, that's when the dollar was at the all-time high for the year, basically. So what
Huh.
happened on March 20th is all the big money, smart money, they sold out of assets and held dollar. That's why dollar rose in value to
Okay.
20th. So when dollar was at its highest value, that tells you that then dollar dipped. So dollar wasn't in demand anymore. Like things
Yeah.
in demand, they sold off dollar,
Yeah.
bought it back into assets. So like they literally just cycled money without like just casually.
Jesus.
Good.
Huh.
Yeah. So then they cashed out into dollar and then bought back at they made the dip. Like that's how smart money moves.
Yeah.
They move market. They create market structure. So like, but then there's this whole thing on the Fed printing money and like so quantitative easing is when they start they're buying assets. Like all of this is the Fed buying assets. Like
Yes.
like if you look on those Bloomberg terminals, the Federal Reserve, is the largest investor in the world right now.
Yeah, dude, they've been buying stocks like fucking
They are
every
the number one
trade.
largest investor. Like they're buying everything. Like how is that sustainable? I don't know, man. Like
Hmm.
what we're living is essentially seeing how theory really differs from reality, like in my opinion. But
That's interesting.
like you just have to play it out because like people are trying to call tops and bottoms. I know a lot of my friends are trying to like start accounts, but it's like okay, if smart money is selling and like everyone else is trying to buy, like that sounds like a bad idea to buy at the all-time high.
Yeah, I kind of agree with you.
Like I zoom out and they say okay, buy low, sell high. Like buy low, sell high. Well, why would you want to buy at a high? I don't know, man.
No idea.
Yeah, because like this chart, is this the one I'm looking for?
Oh my God.
Yeah, there's actually one that goes even further. I want to find that one. Like it shows the whole history of the S&P. It's pretty cool. Yeah, this one. Okay, let me just clear all this. Yeah, this shows the entire history of the stock market.
Holy shit.
Clear. We got Luke in here. What's up, dude? Okay, so yeah, so this is the entire like stock market since 1870s, man. Like, is this
Back
is this
back then.
is this gonna keep roller coastering up? Every 10 years you have like your business cycles. So like 2008 dipped, 2001 did it dip 2001? Yeah, around here. Um, dude, it's just that when you take the normal scale of it, like it's exponential. Like, see
Yeah,
that? It's
completely.
crazy, dude. It's crazy. Like it looks like we're at this point right now. We're like restarting. Yeah.
That's nuts.
So then you take the log, which like smooths out it, and the structure kind of repeats.
Yeah.
So I don't know, man. I really want to know how the market's gonna react to this. Like I don't care about stocks personally because I don't trade them.
Yeah.
But if I had a job, an index fund or a mutual fund or whatever, this is what I'd be looking at.
Interesting.
I mean, it technically broke out. It'll break out. If it made a high, higher low, higher high, should continue up. No,
Mm-hmm.
but it's just, dude, it's so high. I don't like it.
Next time some shit like coronavirus happens, I'm not missing out like I did this time. I didn't buy into enough shit when uh all that went down.
Yeah.
Messed up.
Let's look at Tesla. Tesla stocks. I know someone who bought the dip on Tesla. Like, such
Which
a
did
mean trade. Bought the dip right there.
no.
That's ridiculous,
That's insane.
dude. Let me see if I can find my, because I want to show you guys, like, essentially, this is the setup I trade. And I'm going to be doing a simulator session on the setup. Oh, wait, no, I drew it on Bitcoin. Um, okay, it's almost 1:30, so we'll start in like a few minutes. I just want to show you the quick Bitcoin setup. BTC, USD. Because all my trading really is based on is technicals. So I don't really look at news. There we go. 4 hour.
How has trading based off just straight technicals been working for you?
Dude, so I had this one account of $1,000 account. I grew it to like, wait, was it 1,000? I think it was like $1,000 account. I grew it like 74%. And I have the whole track record on my FX book. And it's really just, I'm trading, it was just trading one setup. Other than that, all the other times I've traded multiple setups, multiple currency pairs, like in the past years, I've literally just failed. So my whole my whole strategy is trading one setup, one pair. And yeah, trading like your girlfriend. Okay, so we got, okay, it's 1:30. So let's start. Yeah, guys, welcome. My name is Alvaro, and I'm the Chief Investment Officer of the Young Investors Club. So my workshops, let me get to the simulator. It's all going to be based on this right here. So I don't know what you guys have as far as experience. So I mean, are any of you guys experienced in trading, or you just put like a yes or no in the chat, or what you guys know? Because the whole purpose of this workshop is I want to bring you guys from like zero knowledge to understanding why price is moving, what price is doing, and essentially being able to read charts, you know, analyzing. So let me pull up this thing real quick. So yeah, my biggest motto in trading is when you look at the charts, you know, people are always talking about stocks, right? Markets going up, markets going down. Well, we're trading currencies. So in the world of currencies, this is a currency chart. And as you can see, it fluctuates really aggressively. So people think that there's noise, it's gambling, the reality is there's structure to this. If you look at enough charts, and that's what I want to kind of do in this workshop. I want to train your eyes to see price in terms of market structure and setups. So I'm just gonna write down a Word doc so we can take notes that you guys can have after. Put this right there. So big thing in trading, we want to see price in terms of market structure and in terms of setups. So let's just take a quick second to look at this. This is a price chart of euro dollar, right? So really simple, it's box plots. You don't need to know much math statistics, just need to know that this is price. If we zoom in, well, let me add my time frames real quick. I don't know why it's not there. So yeah, each chart is essentially showing a specific time frame. What I mean by that is we're looking at a period of time where each candlestick, so these are candlesticks. Wait, let me see the chat real quick. Oh, I didn't realize the chat. Okay, there's a chat. Okay, known with for extra time. Okay, so yeah. So we got Ethan, Jawher, Luke, Nicholas, Alejandro, guys. Okay, yeah. So also, if you guys get a little lost, like literally stop me, ask me any questions along the way, because the whole point is, I don't believe that I know all the answers to everything you guys have. So it's kind of like a learning experience for both of us. So yeah, let's look at this. This is euro dollar on the daily chart, right? I'm gonna clear this real quick. So long term, as far as fundamentals go, because people trade with fundamentals or technicals, we're gonna be focusing on technicals. and market structure. So let me just clear this real quick. Trading technicals. All right, so when we're looking for market structure, we're looking for higher highs and higher lows. I don't know if you guys have ever heard of any of this stuff, but this is literally what trading technicals means. When you say when people talk about fundamental analysis in the news and stuff, they're mostly talking about interest rates, FOMC reports. That all affects the economy and usually the macroeconomics of the currency pair. When we're looking at technicals, we're really just looking literally at price. Like technically, what is price doing? Technically, price is going up, it's going down. And in terms of market structure, there's a setup to it. So see how there's extreme points, highs, lows, high, a low, a high, a low, high, higher low, high. And then we have a zone right here. I'm gonna cover all these specific scenarios, right? So these scenarios, they're called price action. So market structure is really just the higher highs, it's extreme points. Price action is the scenarios of price breaking a level. So this is a level because it rejected. Came back up, rejected again. Came back up, this time it broke it. So that would be a break. This is a rejection. So next time price comes up here, it can either break or reject. And knowing that, you can zoom in on the smaller time frames. So I know it sounds a little complicated. It sounds a little like, when I first looked at trading, I first pulled up a terminal. I looked at it and I thought, okay, there's all this data, there's all these like numbers, buttons and all that. All you're really looking for is the highs, the lows, and if price rejecting or breaking. So I'm just gonna write that down. Breaking zones, rejecting zones, and sometimes you have fake outs. Because like this is the currency market, it's the most manipulated market there is. So, oh, and just to clarify the thing on time series, so this is essentially a time series chart. You have data over time. In this case, we have box plots. So the simple thing about box plots is you have each candlestick showing you data. And this is the daily time frame. Like right there, it says daily. So each of these candles shows you an entire day's worth of data. So here, red candle means down, green means up. Like super simple. We have the open, the low. Price went up here, made a high, and then came down. And actually to show you guys this, there's this concept called fractals that within each candlestick, so this is a daily, right? One daily candle, this is yesterday, 2 days ago, 3 days ago, 4 days ago. This is a really big move up. See the wick? And then price came down and closed here. Within these candles, there's actually smaller time frame movements. So there's this concept of fractals I want to show you guys. Like there's a lot of these weird concepts that you don't have to take notes, you don't have to memorize. Just looking at it over time, you will see price develop a certain way and it'll make sense when you look at it. I know it's a little overwhelming at first, but it's super simple once you get the main point. Price has structure, higher highs, higher lows, lower highs. Price has price action, it breaks, it rejects. And fractals mean trends within trends. So I'm just gonna focus on these 3 points. So these are the 3 biggest points that I've learned as far as technical analysis goes. I'm gonna show you guys a website. I'm actually gonna write it down here, which is really a good website for looking at charts. So once I get this whole premise of fractals down, we'll actually move straight into the simulator. So trading view, and this whole document, I'll probably fill it up by the end of this workshop, but I'll send it to you guys after. So this is tradingview.com, and we're gonna keep focusing on the euro dollar. Tradingview.com, you can literally look at anything. You can look at stocks, currencies, crypto. It's really a really good charting software. So I wish it was in a dark color. Okay, so yeah, this is why I like this software. You can essentially customize the axis much better. So like I said, this is the daily candle, daily time frame. So this is market structure. I'm just gonna draw it out for you guys. The first concept I've mentioned is market structure is when price makes a high, a higher low, and a high. Like you see it happens a lot. And it happens within each other as well. This is the concept of fractal. If this bigger like time frame is a daily candle, imagine inside the daily candle a bunch of smaller candles like the 5 minute, the 30-minute time frame showing you different trends. So like I said, like these are box plots. This would be like your open, price came up, made a high, price came down, made a low, and the price closed there. Like, do you guys see that? If it's confusing, I can like repeat and zoom in, but yeah, next candle, price opened here, made a high. See that? The wick came down, made a low, and it closed. So this would be like a downtrend on the lower time frame if you actually zoom in, and we are going to zoom in. But first, I want to show you like the visual, the aesthetic version of looking at it. So within this higher time frame, high, higher, low, you'd see all these little trends, you know. And price might get a little choppier. Choppy is when price kind of like zigzags more. Like it sounds super like weird and simple because it's like it's currencies, it's trading, but the whole purpose of technical analysis is that excuse me, looking at price, analyzing it is essentially an art and a science. The whole art is how you see price making structure. The whole science is how you trade and manage risk and compound your account, really using a little bit of math. But let's just analyze this point right here. Like I said, I'm going to make this. Let me select it real quick. Oh wait. Oops. Delete that. Okay. I do not want it to fill, so there we go. Take off background, add a border. All right, perfect. So we're gonna focus on this area. So this is a daily time frame. What happened? We're gonna zoom in and see the fractal perspective of what happened in price for the euro dollar. So if we go into the 4-hour chart, now each box plot here is worth 4 hours. So it gets more detailed. So when you zoom out, this is kind of what the daily time frame looked like with more detail. If we zoom back out to the daily, you see that? Price came up and made these like choppy, kind of like really close knitted zigzags. So this is the daily. We're gonna focus on this area. Go back in 4-hour. And the whole idea of trading, the whole thing about trading is you want to look for trends within trends that you can essentially exploit, make money, trade, get in buy positions or getting sell positions with the trend or against the trend. So see that? The big move and then all the chops. And this is what we highlighted on the daily. So you can see the one day price came up and then came back down. So the whole, excuse me. So this was, what was this? 9/1. Okay, so this was actually the beginning of the month. We're gonna focus on 1 week of trading. So let me see from 9, move this out of the way. 9/1. All right, so that's 1 a.m., the new daily candle. So this is a 4-hour candle, 5 a.m. See at the bottom, it says 5 a.m. Then this is 9 a.m. This is market open. This is when we would be looking at the charts, right? So I'm gonna put that right here. What I'm gonna do is show you guys each individual trading day and what happened. So this is 9 a.m. the next day. So you see that this is the first day, 9 a.m. Price came up, then down. This next day, price came down and then rejected. So let's look at that back again, just to see what happened. Price came up and we had a zone. So this is the concept of price action. So market structure is the idea that, okay, we're making higher highs, higher lows, right? But we're making higher highs and higher lows in a lower time frame. Like, look, this is the 4-hour. We're making these highs, higher lows, highs, higher lows, but we're coming into a daily zone, right? Market structure and price action. So we're going to focus on zones that reject. You're trying to find trends in the similar time frame that would mimic. Yes, that's literally, it's really that simple. Because if the daily time frame is going up, but like say the lower time frames are going down, at some point those lower time frames will break, and we're actually going to talk about that. That's a really big point. Market structure. We're going to focus on breaks in market structure as well. Breaks in structure. So yeah, we're looking for these lower time frame moves that mimic the higher time frame. That's the whole idea of fractal. A fractal is essentially, so if you look at a map of the United States, it's smooth, right? Then you zoom in and look at the countries, or not the countries, I mean the states, you see more borders. And if you look at Florida, you'll see even more borders. And you look at the cities, you'll see like the beaches. The closer you zoom in, the more the borders will change. That's the whole idea of a fractal. So in currencies, the trends will change instead of the borders being on the map. So yeah, that's what we're looking for. And we're looking for trends within trends. That's all a trend is. When people say price is trending, it just means higher highs, higher lows, lower highs and lower lows. It's that simple. Like it really, the hard part is being consistently profitable. But yeah, so back to this. We're looking for higher highs and higher lows, but price is coming to a zone. So we have to ask ourselves, let me see, get this, there we go. So one thing that always happens is price will break a zone or it's gonna reject. Like already, you have two possible scenarios. This is a zone, price came, tested the zone and rejected. See how like these are zones right here? High, made a high. See how it rejects the zone, the extreme points? The extreme points are the best points to use for zones. In this case, this is an extreme point. Price broke and made an actually really new high. So right here, extreme points. We're just focusing on this area. Price is making higher highs and higher lows into the zone. What do we expect to happen? So one thing you'll notice is that it looks a little messy, right? The daily time frame made more sense, but here, you know, the zones don't really line up too well. We're always going to want to adjust the technicals, like this is the analysis. You always want to adjust to the lower time frames. The higher time frames will dictate the direction. So, for example, say we wake up, we see prices at our daily zone, right? So visualize this being a bull candle. See how there's a wick right there? Imagine price is up here. What would that look like? Like say you didn't see any of this. You didn't see any of this. Price just looked like this. And there was this big candle coming up. Price is at all-time high. Technically, we didn't close above this zone yet, right? So we might, and here's the thing about trading. A lot of people talk about Forex and you know you can make money every single day. You might really not be trading every single day depending on what you trade, what your setup is, what your criteria is, right? So like this might not even be a trading day because the daily hasn't really given direction. The daily candle is above the zone, but the daily candle isn't closed above the zone. So that's another thing I want to focus on with price action. Price action, we want to focus on what confirms the move. So let me just go back and show you some examples. Whoa. No, okay, full screen. There we go. So in this case, this is a good zone. Price is an uptrend. Price made a high. And keep in mind, this is the daily time frame. When we get into like the 1 hour and the 5 minute, you'll see these setups happen a lot more often. But there's also a lot more that fail. It's knowing which ones have more probability of success based on the higher time frames. So here, what confirms? This is kind of like a similar situation right here, right? Remember, we just woke up 9 a.m., candles up here. But what happens? Well, in this case, in the past, what's happened is price came up here, this whole daily candle came, the daily candle closed. How long did it take to learn this information? Okay, yeah, so I was talking to Logan early before the whole start of this because he was on early. And yeah, my biggest thing with trading is I've been doing this for almost 3 years. You can read all the books you want, you can take all these courses, but in the end of the day, you just have to look at price. So my biggest perspective or philosophy is that I'm just going to pause this analysis for a second. When you look at price, it's a language, right? Because people say there's an argument that, okay, is price random? Is price structured? Is price manipulated? Like someone can, it doesn't really matter how you think of price. Just think that price is always changing, right? This is always adapting to new data. But if you think about it, it's adapting to new reactions. At the at the core of each price movement, there's someone buying and there's someone selling. Who is that person, right? Well, we're trading currencies. Who has the most currencies? Banks. Banks control price, central banks. And if you actually study interest rates, you know that currencies long term will follow the interest rates. So you can really look at currencies how you want. If you look at price over and over again, you will see these patterns repeat, these higher, you will literally see them and you'll kind of get a feel for it. So that's really it. I just look at charts. I've been doing this for about 2 years now, turning 3, looking at charts every single day. And one thing I want to show you guys after just get this whole example through is the simulator. So in the simulator, I can actually replay market data and simulate scenarios. So yeah, 2 years of failing, 1 year of pretty good success. I do want to. I'm not where I want to be, but I want to share with you guys what's happened, what has helped me along the way. So yeah, I'm not self-taught. I've learned from a lot of people. Honestly, I learned from Instagram. There's this dude named Wix Don't Lie. I'll actually put a few references as well to some amazing sources, because the hardest thing about learning anything is, okay, like what's the most efficient way? What's legit, what's not? So I'm gonna put sources. It's kind of funny. There's this dude named Wix Don't Lie on Instagram. I learned from him. He has a YouTube channel. I'll link that as well. Whoa, what's going on? Okay, yeah, so he also has a YouTube channel, and that's how I learned. I literally just learned by watching price every single day. And after a year of failing, so this is like what, 2017 to 2018, I look at one currency pair and one market. So my whole idea is, yeah, treat trading like a girlfriend. Like you want to know the ins and outs of the market, same way your relationship. You want to focus on it, quality over quantity, same idea with trading. So that's why in the simulator, I'm only going to show you guys one currency pair and one setup that I trade. But there's hundreds of setups you can trade, really. It just depends on what makes sense for you. So yeah, there's also Instagram. You can also find them on YouTube. Really, really good source. So yeah, back to this example. So let's talk about the confirms for a break or a rejection. So in this case, this would be a zone because price rejected. Price came down. This is so yeah. One thing about market structure is that, did I write it down? Yeah, okay, I didn't write it down, so my bad. So we have trends. So I talked about trends, right? And consolidation. Consolidation is the opposite of a trend. So a trend is when price is moving in a clear direction. You have your highs and your higher lows. But then what happens if price stops making new highs? Like this. You have what's called consolidation. You have this essentially, price is moving sideways. Yeah, I should have covered this quick, but my bad. So if you look at it, say you don't know what's happening, you really want to wait for price to break out. You don't want to get stuck in there's this whole idea that you get stuck in consolidation because there's no clear trend. Like right here, this is a really bad consolidation, but then price broke out. And keep in mind, this is the daily time frame. So breakout on the daily, that means the 4 hour and the 1 hour are gonna have big moves. So then let's go back to this. Price made, and I'm gonna repeat myself a lot because I want to really drill into you the scenarios, because it just takes repetition, like anything. Price came here, the daily candle closed. Next daily candle went up, then went down, and this is kind of like a higher low, right? So this higher low broke, and what we call this like a retest. It made a new zigzag low. So I'm gonna draw this out because this is actually a really good example. So price made a high right there. Price then, and this high broke the old high. Then price made a higher low. So That's market structure. Market structure is like literally the structure, the direction. Price action would be the reaction. Yeah, think of price action as the reaction. Price could have easily faked out and closed back in the range. This is what I mean by range. Consolidation is kind of like a range. Range would be like the area you expect price to move. So if we break out of this range, quote unquote, we're gonna have this whole area to cover because that's how price moves. So this is actually a really good example. Let's highlight this. This is a beautiful uptrend. So I want to show you guys the fractal perspective now. Let's zoom in and see why that's an uptrend. And once we see why this is an uptrend, we're going to apply it to what the scenario we were talking about up here. Okay, and then I want to show you guys a simulator of actually trading this and how to make money and how to manage risk, because you're going to take losses, like it's inevitable. It's how you manage those losses. Okay, border. Yeah, let's do border. It looks nice. There we go. So this is one daily candle, another daily candle. So say in a trading week, you'll have maybe 4 uptrend days and one that day that goes against the trend. So in this case, say we were trading this, we only want to look for buys. We're only going to look for market structure pointing to the upside, pointing to, whoa, higher highs and higher lows. There we go. Yeah, I want to rewrite that. I don't like the way that looks. Ooh, we got a typo there. Oh no, oh no. Okay, there we go. So daily. Now let's zoom in straight into the 4-hour. Okay, see that? Zoom out a little bit. That was the high we were talking about. Then price on the daily came up and then price broke. Price then came and made a higher low. But let's see each day, because so I don't know if you guys trade stocks or anything, but a lot of people when they trade stocks or other markets, they kind of hold. So when you invest, you tend to hold. Some people who trade hold for a few days or whatever. The way I trade is I hold for a few hours. So you'll understand why and when I get to the simulator, because it explains all the perspectives. But yeah, let's see what happened each single day. So this is 7/14/2020, 9 a.m. The reason we look at the markets in the morning is because markets have there's a whole, so when I said earlier, I'm gonna write this down because this is one of my favorite quotes. Wait, price is demonetized. Price is the language of monetized emotions. So what do I mean by that? Buyers and sellers are they're interacting. They are causing reactions in the market to go up or down. They are the reason why price moves, because people are engaged in the markets. But there's a psychology to it. So the reason we look at the market is because the market opens at USA time. USA open is 8 a.m. So if you think about it, people wake up usually at 6 or 7 to get ready for work. So the markets generally around 6 a.m. to 7 a.m. are kind of slow. There's usually no big movements. 7 a.m. more towards 8 a.m., that's when the market opens at 8 a.m. exactly. That's when things start to pick up. That's when essentially, you have banks, they're managing their algos, hedge funds are making plays, news is coming out on Bloomberg. 8 a.m. is when the market opens. That's when we'll see bigger moves. 9:30 is the New York Stock Exchange. So 8:30 to 9:30 a.m. is a really good time to look for essentially price to form a trend, right? So like I said, this is the 9 a.m. We're going to look at each day and see what happened at 9 a.m., 8 to 9 a.m. around. Because that's usually when I trade. Come on, what happened here? There we go. There we go. So yeah, visualize that. So try and visualize. The key is visualizing. This is the daily making a high and the daily making a higher low, right? Technically, well, actually really want to run this on simulator, but I just want to show you guys all the scenarios before getting to the simulator. 9 a.m. There you go, 9 a.m. Okay. 9 a.m. Eastern time. So what you notice on, I'll get, if you guys actually want to get into trading and demos, there's this whole thing on GMT time, UTC. I can go over that later, but for now, this is Eastern time, 9 a.m. Yeah. Yeah. So yeah, Luke, that's literally one of the simplest strategies, and it works. Trading is not complicated. Like, you look at my charts. Well, actually, I know how this indicator. I don't know if you guys have ever seen like any YouTube videos on trading or anything, but you don't need indicators. You don't need like exponential moving averages or Fibonacci. All you need to look is price. Price tells all, right? You can look for consolidation breakouts. You can look for consolidation retracements, trend retracements, breakout like. Those are called setups, right? Did I write that down? So yeah, those are called setups. And that's when you really, and what I mean by setup is you're refining criteria. Setups have criteria. It puts together everything. When I trade a setup, I'll show you guys. I'm just looking at market structure, price action, to all point in the same direction. Trading the trend, the simplest thing. So in this case, so yeah, back to this case. Say we wake up right on this day. The daily candle closes above, right? Because we're not gonna trade without a confirmation. Say the daily candle closes above and that's our confirmation. Now we wanna look for buys, right? Because the trend is up. If we wanna look for buys, one scenario we can look for is a breakout, a retest, like those are setups, right? Like if you see that this is consolidating, this would be your breakout. See how this is a zone right here? And this would be your retest. Because that's literally what happens over and over again. But sometimes if you're trading consolidation, you'll notice that these zones will fail. It'll break out, retest, will get stopped out. So that's because this is a daily consolidation. You want to really trade with a trend, not consolidation. So after consolidation breakouts, like Luke, like you said, like look at this move. This is a huge move. The thing is you can catch these on a smaller time frame as well. So this day we don't trade because the daily candle isn't closed. But say the daily candle closed. It confirmed to us that now we should be looking for buys with the trend, right? Say we look at the price here. Okay, this could be a potential zone, but let's see. 8 a.m. 6, 7. Oh no, wrong. Oops, my bad. Going back. Okay, there we go. So daily candle closed, right? This is the next trading day. 9 a.m., 8 a.m. We see that there's no real, so this is a high, higher low, but this wasn't really a strong high. Like price came here and it kind of just stopped. So say we wake up, right? And we see this. If all we see is this, we have a high here technically and a higher low, and we're in the middle of the range. There is no real zone that's like giving us good confirmation. So if we look on the, so this is the 1 hour chart. You guys see that? So this is the 1 hour chart. I'm gonna go back again and show you guys. Oh, too far back. Okay. So on the 4 hour price, the daily closed above, 4 hours up here, there's no real good setups. On the 1 hour, so keep in mind the trend is up, but what happens? Price goes down. And the cool thing about currencies is you can trade both the upside and the downside. It's not advised to go against the trend, but it works because currencies are that volatile. They're that like erratic. So what happens here? Price makes a high, higher low, high, higher low. Like you see the zigzags. This is the 1 hour chart now. So we're getting more details out of each zigzag. See that? Overall, we're going up, but there's a lot of these up moves and down moves. And you can technically play both directions. But if we're only looking for buys, we wouldn't even trade this down move. But let's look at why. I want to see if we can find my setup. I have a really particular setup that I look for. I don't know if it'll show up on this, but so now this is the 30-minute time frame. We're going into all the detail, right? High, higher high, higher low, higher high. So what happened here? It's essentially kind of like consolidation. You don't really have a clear direction. I would be looking for buys to the upside, but that didn't happen. So this might not even be a trading day for me. But if you take buys to the downside, like you can. So one thing I want to show you guys later on is entry, exits, targets, what to look for. But for now, we're just gonna see like I would only take buys to the upside, but that didn't happen, so I wouldn't even trade this day. So like one thing in trading is you wouldn't really trade. So the way I trade is I scalp. There's this whole idea. I'm just gonna write this down as well. Trading perspectives. There's investors who look for trading monthly, yearly. They look for holding, right? There's people who day trade, who trade maybe holding for, actually we'll just call them swing traders. Swing traders maybe hold trades for a few days, few weeks. Days, 2 weeks. Then you have day traders who trade for a few hours, maybe a whole day. I'm a scalper, so I use all the time frames to look for the most precise entry to trade for literally within a few hours, maybe a few minutes if that's the case. If the price can move that quickly. People say it's more risky. All it is that the price is moving faster. Price is fractal. It does the same thing, trends within trends. The lower the time frame, scalping, the faster the move, right? That's why I'm going into all these detailed time frames, because I use the structure to look for a break. So yeah, this is the break instruction I'm talking about. Price is making higher highs, higher lows, but we're looking for buys, but we didn't get any confirmation. There's no close above the zone, no confirmation of a buy. So I'm not taking a buy. I just don't take a trade. So price breaks down, and now we have a downtrend. So keep in mind, this is the 4-hour time frame. We're gonna go back to it. So this trading day, we didn't see anything we wanted. The next trading day, we wake up and price is near our zone, because price will retest and it'll break. It'll break then retest. See how this is a zone here? Price broke and like you can scroll back and it just repeats. So it gives you a sense of probability. Price broke up. Next trading day, we still want to look for buys because the daily closed above the zone. That's a strong confirmation. So what's our confirmation now to take a buys if we see anything? We're going to zoom in and see if we can find more confirmation. I don't like this whole dragging thing. It's a lot easier in the simulator, but we do what we can. So next trading day, we wake up, we look at the charts maybe from 7 a.m., get an idea of what's going on. So 7 a.m., right? 8 a.m. is market open, Eastern, 8 a.m., 7:16. So price, let's see. You guys see that? I'm gonna draw it out. So we have a high here. Make this bigger. We have a higher low. I'm actually gonna screenshot this because this is beautiful. Then we have a higher high, higher low, higher high, higher low. I'm just gonna draw them out real quick, because the whole idea of fractals is that there's trends within trends, right? There's trends within trends. What we want to focus on is when the trends break within those trends. Higher low, higher high, higher low. So yeah, this is the 1-hour time frame. Higher high. We got a higher low technically here. Like this is where trading becomes more of an art, more subjective. Is this a higher low and then it just failed? Or is this your higher low and you ignore this? This is really it's really up to you, the way you see it. Everyone has their own way of viewing it. Say this is our higher low, right? We expect price to make a new high. That's what we expect. But instead, overnight, right? This is overnight. Overnight price makes a lower high. This is what we're seeing. So at this point, you know, if price makes a lower low, that's a downtrend on the lower time frames. That's a downtrend on the lower time frames when the higher time frames, the daily and the 4 hour, are moving up. Because remember, the whole basis is that this is the confirm. The daily, ooh, we're so far back. Okay. The confirm is that the daily candle closed above and it's going up. This day we didn't trade because there was a down move. This day, price is at our zone. So daily time frame, going back into the 1 hour. So we like details, man. Details, they matter. So yeah, look at this. We wake up, we see price made a lower high, and price technically made a lower low, right? But, you know, a lower low like this into a zone, what is the probability that price rejects a zone? Price rejects zones all the time, like right there. When price is making higher lows, you don't want to trade against it. So yeah, it broke this lower low, but then 7 a.m. price pulled up, 8 a.m. price came up, and now this is the 8 a.m. candle. So we wake up and we see this. Price actually, this is called a break of structure, right here. Break of structure. Got like another 20 minutes. So yeah, so what happened here is that this is one thing you'll notice is I love to use trend lines. Trend lines are so good at visualizing. Look at that. Instead of counting, and literally, instead of counting the lower highs and lower lows, you can just draw a trend line and it marks it for you. Like this is a lower high, this is a lower high, and see how this is a lower low, right? But we're literally at a daily zone. If we adjust it, and I remember I said that you always want to adjust the time frames. We can even get more into detail and put a line. Like I said, this is where it becomes an art. Do you use a line? Do you use a zone? Do you use trend lines, or do you just visualize it? And like, it all comes down to what makes sense to you. And that's the hard part of trading. The hard part of looking at charts is figuring out what makes sense to you. Because it's a language. I'm not going to tell you to talk. I'm not going to tell you to pronounce your words. It's a monetized language. You choose how you want to speak with the markets, essentially. Kind of philosophical, but it works. So 8 a.m. price is here. We broke, and actually we made a higher high. So we made a higher high here, 8 a.m., right? How do we trade this? Do we just take a buy, put stop loss below? We could get even more details. I wonder if it'll show me the 5-minute time frame. To go really far back for that. Will it show me? Okay, it won't show me the 5-minute. Oh no, I can do it on simulator, no worries. So it'll show me the 15-minute. 15 minutes still fine. So see how this kind of looks like the 1 hour now with more details? It looks like the 1 hour chart. Now we can refine this even further. So that was, this was the day we didn't trade because price had a down move. We want to trade the uptrend, right? Overnight, price made a lower high. Remember we saw that on the 1 hour time frame? And now this is our daily zone, if we really zoom out. So we could literally take a buys at a zone. Let me draw it out for you. We have a zone here, right? Now this is also where it gets, okay, where do I take my trade? There's a lower high plus a zone here, a lower high plus a zone here, but there's also a zone right here. And so think of this in terms of market psychology. 6 a.m., 7 a.m., you know, there's an uptrend, there's a move, right? But then market opens, price comes and retraces. Price finds a zone. What happened over here? 8 a.m., let me see that. So yeah, this is 8 a.m. Price was at a zone and rejected. Let's go back one more day and see if we can find that example. So yeah, 8 a.m. price came and found a zone and it rejected. You see that? This is 8 a.m. 8:15, 8:30. Price finds around market open. price will find a zone. It just repeats. Now, obviously, we're looking back into charts. This is called hindsight analysis. It's easier said than done. But with probability and consistency and trading one thing, it works long term. 7. So you see that? 8 a.m., price came down to a zone and then rejected. That's market psychology. Things just repeat like that. It's the nature of the markets. Price came, so this candle made a high, right? This high broke this high. And now these are 15-minute candles, so you'd have to wait. Okay, so now there's a high. What happens after high? Usually a higher low. Delete that. See this? Lower high, lower low, lower high, lower low. But now we broke all these. So now that we broke all of these low, well, we technically broke this downtrend just by breaking the trend line. Now we want to look for higher highs and higher lows, right? One of my favorite setups is literally a triple bottom. On the 5-minute time frame, this is my setup. I literally just trade. I'll draw it on 2 lines. So when you talk about setups, my favorite setup is a major zone plus triple bottom. Like it's literally that simple. The hard part is finding, okay, when is this a good time to take a big trade? When is it probably going to come back against us? Like the hard part is just the entries and exits, but we'll cover that in other workshops with the simulator. This is just to get you guys to see price for what it is. Price is fractal. Dude, price repeats. It's structured. I don't like the idea of calling trading random because it's based on reactions. Reactions, like talking to someone, you can say some things and expect they're going to say something else based on what you said. Same thing with trading. There's reactions. There's buyers and sellers, and based on what they're doing, you can anticipate. So there's structure. It's like there's this whole idea that history repeats, but you can't predict the future. So it's kind of like, I don't like calling it random because it repeats. So look at this, triple bottom, 1, 2, 3. Or this is where it becomes an art. Do we use this triple bottom? 1, that technically could be a higher low. This is where it becomes really subjective. Like our zone is here, right? But we can add more details. Zone plus triple bottom. So say we don't trade the triple bottom, we just trade the zones. We want to keep it simple. Price opens, makes a high, next 15 minutes, comes down. Next 15 minutes, price comes down here. And it closes, if you look at these wicks, price pushed into the zone. Imagine this being a candle like that. But then price came up. So price came down and then came up and closed. Next 15 minutes, price did the same thing. So there's a book. I'll actually add this under sources by, what is his name? Mark Douglas? No. James Dalton. James Dalton, Mind Over Markets. I'm pretty sure that's the book. And he's a futures trader. Futures is a different type of market. It's similar to currencies, actually. But what he says is that when price reaches a zone, there's this whole idea that it's called it's like a belly button. Like you're pinching a belly, and then price comes back out. Or he uses 2 examples, either the pinching belly or the hot pan. Like price touches, think of zones as a hot pan. Price will touch it and bounce right back out, showing you that there's a reaction taking place. Zones are not, this is where it also becomes an art. Zones are not fixed. They're kind of fluid. Sometimes they respect perfectly, sometimes they don't. Sometimes price will break and make a clean retest and come down. Other times price will make these big wicks. And that's the whole idea, that price just reacts to orders that way. So what happens next? Price closes above. This could be a confirmation, a candle closing in our direction. This could be. We're going to go more over confirmations in another workshop, but for the sakes of this workshop, say this is our confirmation. We broke the trend, the counter trend, and we take a trade. Now this is a whole nother area of trading. Entries, exits, what do you do now? This is the perfect analogy where greed kills, because say There's no such thing as calling tops or bottoms. You have to have an entry and you have to have an exit. Calling tops and bottoms, saying that this will go on and go on and on and on. In currencies, doesn't work like that, because the currency market, this is what they mean by volatility. It moves a lot. Currencies are volatile and they move a lot. So daily is in an uptrend, but look at all these down moves that you can trade also. The thing about currencies is you can trade them 24/5. They're much more flexible, but they're also much more manipulated, but they're also more structured. So it's really a weird market. So this could be a setup, but look over here. We didn't target these highs. So I'm going to cover more entries and exits, but for the sake of this, say we just covered the most recent zone as our exit. What's our most recent zone? Well, we have a zone right here. This is a zone that broke and needs to retest. These are highs, but price didn't break up. Price broke this zone and retests. So one thing I really want to focus on is market structure, retests. We're going to cover all these scenarios. But we're going to focus one at a time, because it's like, look, when I first looked at charts, dude, like this was overwhelming. Like I looked at all these and this might not make sense at all. You might not even be interested in trading currencies, or you might. The whole idea is that if you look at price in terms of structure, you can trade any market like that, literally any market. So look at this. Recent zone, price broke, and price retested. And then price came down. So if that was our target, maybe even this zone right here, maybe in this zone could have been our target, more conservative. But then this gets into the area of, okay, what's our stop loss? What's our risk to reward? We can cover that later, because right now we just want to see structure, just structure. Price made a high, higher low. And by this time, like, think about it, 9:30, 10 a.m., 10:30, 11 a.m. So one thing that's interesting about 11 a.m. is you trading currencies, right? There's a lot of market opens and a lot of market closes. Like there's the Australian Open, there's a Tokyo Open, there's London Open. London Open is at 3 a.m. and London closes at 11 a.m. What does that mean? 11 a.m. our Eastern time, our 11 a.m. Eastern time is when they stop trading, when their market, that's like their 4 p.m. essentially. So it's pretty cool how around London close, you know, the move is done. It's almost as if market psychology. The move is done for the day, people take profit and they leave, and the market comes back down. Market psychology. So that's why I like trading from 8 a.m. to 11. That's like the perfect time. Trading 2 p.m., it's not like stocks. Stocks, you can trade like the session close. Here, like price dies off. There's like all this consolidation, no clear move, no point. Or you can trade the downside and look at this big move, right? So let's look at the next trading day. Are we good on time? We got like another 10 minutes or so. So yeah, next trading day, we're still looking for an uptrend. I'm gonna clear all this because this is our higher low. So what happened? If we wake up 9 a.m., 8 a.m., 7 a.m., whatever. Okay, yeah, so that's the 4-hour candle. We wake up and we see that essentially the same thing. Price broke this lower high. Well, it didn't break the lower high, it broke the trend line. Excuse me. Higher high. I'm gonna call it a high. So what happened here was price broke to the upside. But see, okay, so this is interesting. That day, the 4-hour candle did not close above this like, I guess this could be a structure or zone. It didn't close above, right? If it did, like this, it would have kept going. So that's why looking at candle closes is a really, really good confirm. So breaking zones, candle closes. So it's a great confirm. And actually all those buyers who got greedy, because you have to have entry and exit, you can't be greedy. If you get greedy, this is what happens, you lose. And then you're like, oh crap, what happened? So now let's look at the next day. We wake up, price is, it came up overnight, came up. Now it's starting to push up again, right? You only see this. 1 hour chart. Man, I love looking at these charts. So many patterns. Okay, so, it doesn't make sense. So we can adjust it, but for the purposes, yeah. See, sometimes this is where it looks pretty on the 4 hour, but on the 1 hour, the more details, sometimes less is more, right? There. Now let's see what happened. Overnight, price is consolidating. Like, yeah, like there's a setup. Price is consolidating, then broke out. So on the 5 minute, you could see a confirmation here. But let's see. Say we wake up, okay, 8 a.m. is right there. So that's 8 a.m. Isn't it ironic how price comes down, market open, then pushes up? And this wasn't even a clean setup, but the whole idea is that around market open, price comes to a zone. It just repeats. Next 8 a.m., look at that. 8 a.m., price came straight down to a zone. And people got stopped out here, dirty. But yeah, that's why if you can see this as people will call this a stop hunt manipulation. I call that lack of knowledge. So you never buy until you think you see a confirmation. Never buy until you think you see a confirmation. So that's also, for right now, for me, that's a gray area because sometimes I'll look at the 5 minute for a triple bottom. And the formation of that triple bottom might be my confirm. Or sometimes I won't. It really depends on what I feel, I guess. But for the most times, I look for a confirmation. My confirmation, I'll show you guys later on, is a triple bottom that breaks a structure. Because structures break, they have to break one way or another. If there's a downtrend or consolidation, it has to break to follow the trend. Now, just because it breaks to follow the trend doesn't mean it's going to continue forever. Like here, this trading session, it broke up into the trend and then came back down. The uptrend is the higher time frames are still going up, but we're so zoomed in that we have to realize that the lower the time frames, you're not gonna have trade-ups, you're not gonna have setups every day. That's just the reality. They might be more manipulated, more variances, but so yeah, back to this. Price consolidating, price broke up. I'm gonna draw that. So our bias is still up. The biggest key for analysis is having a bias in terms of direction, but being able to adjust if needed, right? Like here, our bias was we wanted to take buys, but price didn't break up, so we didn't force a trade. We just left it as is. Here, overnight, price broke up. Say we're looking at the charts around 7 a.m., right? Okay, so price is near a zone. That's a red flag. Do we want to take buys at a zone? That's kind of low probability because at zones they tend to reject. So in this case, say we still want to take buys because we know the trend's going to go up. It might not. This scenario just didn't really work out. But let's see what happened. So this is a zone technically. Like look at the extremes. The easiest way to look at zones is look for the extremes. So there's a high, there's a high. So right here, expect there to be rejection, which did happen. And we're doing hindsight for now, but yeah, this is a low. This could be a good place to take buys, or the retest of consolidation. If price really wanted to come down all the way here, which it almost did. It almost did. So in this case, say we want to trade the same way we traded the other. We want to look for a candle closing in our direction. Because that let's say that's our confirm. We want the candle to close in our direction. Past a zone, right? So let's look at this right here. Consolidation, no new higher highs and no new higher lows. So this is literally ping pong, bouncing back up and down, ping pong. Price breaks out, comes up. 8 a.m. market open, right? Price comes up. There's actually a zone right here, a lower time frame zone. But these zones are kind of weak, right? So they're good to see, but don't rely on them. Oh, whoa, my bad. Okay, I messed up. Oops. Okay, let's go back to that. So relays, it's almost 2:30, so I'm just gonna finish up with this example, then, okay. Yeah, so market open, price came up, and then market open, we usually want to target a zone, right? So say we're looking for buys, there's a good chance price could come up to here and reject. So in that case, this might not be a trading day. We just might not trade it today. But say price comes down, right? And we see, okay, price comes down here. We could take buys down here. They're high probability. Stop loss below. But there's a zone right here. So this is the 1 hour zone, the higher low, right? What price does is price made a retest. And this retest happened to be a higher low. Here price this kind of looks like, this one right here looked like it respected. But here's the biggest thing about zones. The best zones that work are when the candle bodies actually come close. See how this candle body closed at the zone, whereas this one, it didn't really, it just made a wick. See that? I'm gonna make this, that's pretty. It made a wick right there, but the candle body didn't touch the zone. So this could be confirmed, but if say you take buys, like after the candle closes, you're so far away from the zone, it's less probability. So that's where trading is an art. You want to think in terms of probabilities. So look at this. Market open, again, price comes to a zone. It repeats. Now now don't get me wrong, it's not that simple. So sometimes it all depends on what's your analysis for the day. Are you trading the upside or the downside? If you can figure that out, that's literally half the work done based on structure. Look at this. High, higher low, high, higher low. I mean, it made a lower high. So once this candle started closing down, you just don't trade. So then what happens? Price comes here, touches the zone, and it's kind of like it doesn't want to break the zone. It just rejects it, makes a wick. Like Jim Dalton said, hot pan, belly button. Price pierces and it bounces right back out. Doesn't like it. Next candle closes above. Look at that. It made a wick. This is where confirmation is key, because say price came up all the way here. See that wick? Think of box plots, right? Price opened down here, made a wick down here. Price came up, came all the way up here, right? Say you don't have a confirmation set in your mind. You're just thinking, oh, price is going to go up. I'm going to miss it. You take a buy. Then what happens? Price comes all the way down. Then this next candle comes all the way down here. You might start thinking, your emotions might get in the way. You might think, oh, I entered too late. I FOMO'd, and you close out. You want to have a clear entry and exit. Say this is your confirm. Price comes here and closes. Look at that. Big wick. So you have visualize this candle right here. Visualize this candle like one of these white ones going down. You have to understand that price is still respecting this zone. The candle closed at the zone almost perfectly. So the probability is that, okay, market opened, came to a zone, the higher time frames are up, this closed in our direction. If you take a buy, what's your next zone? This is where it's like, okay, do we choose this zone? Do we choose this zone? In this case, say we took this zone. That could be our trade for the day. So that's just a good example of looking for trades based on market structure, looking for trades based on zones and the time. Also, my favorite setup, as always, right there, triple bottom. A little later in the day, but the triple bottoms are so reliable. But then, okay, if you're greedy, you get stopped out. So seeing all that, let's just recap that real quick, because I know I don't want to hold you guys too long. Daily candle closed above and broke a structure. So for this week, we are aiming for bullish trades. Just because you're aiming for bullish trades doesn't mean you can take the whole trade forever. Like you have to think about it. Are you a swing trader? Do you want to hold trades for a few days? Do you want to hold for a few? You have to have all these variables, and we'll cover them like one at a time, because trading, I can easily throw the whole chart at you, and this might look overwhelming. You just don't overthink it. If you want to get into trading, slowly immerse yourself into it, right? The more you look at charts, the more you just watch it, the more you watch videos, even just replay this, it'll slowly start to make sense. So applying all that, let's look at this trading scenario right back here that we kind of skipped. The daily candle over here closed above the zone. Let me just delete all this. So the daily candle closed above and gave us our bias for the week because we're expecting a bullish move. In this case, it didn't. So we're expecting a bearish move downside. So I'm just going to do one quick example before we wrap up. We're expecting a downside move. Let's see. I'm going to leave this right here. So let's look at that. Let's look at that. This daily candle did not close above. It actually rejected it. Made a big wick to the upside. So if you entered without confirms buys, then you probably got stopped out. So at 9 a.m., we're making high, higher low, high, higher low, a high, higher low. What's going to happen? Are we going to keep making higher high and then zigzag? Well, 1 hour. We need details, man. Cannot skip on details. Is that a triple? Not really a clean triple top. Okay, whatever. So let's see. 8 a.m. 8 a.m. 8 a.m. 8 a.m. We are kind of at a zone, at a high. Not a clear one. It honestly looks ugly, but say we don't know what's happening. Price is at a daily zone. This kind of looks like a type of consolidation, right? So if the daily hasn't closed, we have no strong confirmation to trade at the upside. We can if we get a confirmation, but say we don't get a confirmation. Price does not break out. So like Luke, I think is what you said. Yeah, Luke. So say this is like consolidation, right? If there's no breakout to the upside, but there's a breakout to the downside, that could be high probability. So look at this. This candle closes below, right? Then it continues down. So this is 1 hour, 2 hour, 3 hour, 4 hour. That was like a nice 4 hour move right there. You would literally take a trade, do your homework. By the time you're done, boom. But we want details. So we want details. So yeah, last example. Let's see. Okay, so you wake up, price is at a daily zone, but hasn't closed above it. So it's at a daily zone. And you have to realize that some of these daily moves, they take time. They take days, right? So if you're trading on like the 15-minute or the 30-minute, you have to realize you could literally play both sides. But that might not be the smartest thing to do. So this looks kind of ugly. Let's readjust this to cover these lows. You wake up and it's 8 a.m. So I would not even be looking at this just because, yeah, price comes down to a zone technically, but it doesn't really cleanly retest it. And also the biggest takeaway is that price is consolidating and we're at the middle of the zone. Like this is a consolidation and you're at the middle. Trading in the middle is the least probable place you want to be in. The least probable. There's no point in trading it. You can, if like I wouldn't trade it. So 8 a.m. comes, price comes up, and price actually breaks. But keep in mind, this is the 15-minute. We want a 1 hour candle minimum. Because from what I've seen over experience, the 1 hour is one of my favorite time frames. It's just a good time frame because it lines up with the market open, 8 a.m., 9 a.m. Perfect. So look on the 1 hour chart. The 1 hour candle did not close above. It made a wick. So someone got emotionally stuck there probably. And then it came down and it closed. So we don't take a trade because there's no confirmation. Because what if it does the same thing here? Price comes down and then it rejects. But what happens here? Price closes below the zone. Closes below. And this is our daily zone. So we're gonna kind of ignore it just because we want daily reactions at daily zones. So we're not going to trade off a daily zone. We want to trade off the 1 hour zone on the 1 hour time frame. But you want to keep in mind that there's going to be a reaction there. See, this is the daily zone. It looks cleaner on the daily chart. And this is kind of where just by looking at price over time, you're going to get an idea of what works for you, what doesn't. So back to the 15-minute. And this is going to be the last example. So look at that. Price at 8 a.m. goes to a zone, but we don't trade it because it's not our zone. And we don't even know. Like we're just watching price. Once price does this big move, breaks out, what happens? Price does it makes a lower low. And it broke all of these lows. And you have this structure here, but we're focusing on what's happening right now. Price comes and makes a lower high. So you might see this big candle and be like, oh, it's going to go up. But you have to realize that there's a zone here. The zones are probably going to reject. Then what happens? If we're trading the downside because the daily never broke above, you have to kind of, the way I see it is I kind of get a piece of paper, I write down daily what happened. I write down 4 hour what happened. Just because the whole idea of fractals is it's kind of hard seeing and remembering what's happening at each time frame. But the more you do it, the better you get at it. And then say you look at stocks, like I was showing Logan earlier, we were looking at Bitcoin and the index. You can apply this to any market. Look at that. Price comes to the zone. Price closes in our direction. I mean, here too. Here, price broke a low, but it's not the most probable. And what I like about this one right here is that, dude, it's a triple bottom, triple top, kind of. 1, 2, yeah, kind of. Well, one thing we're gonna talk about later on is fake outs. Forex, fake outs, they're like brothers and sisters. If you understand fake outs, you can understand when to stay in and when to stay out. Because if you look at this, it might look like, oh, it's just breaking. And this is where you don't want to get too overcomplicated. Oh, look, price came up, broke our trend line, let's take buys. You want to keep trading simple. If you're trading the one direction, it should be based on the higher time frames. We're not going to be looking for buys just because this is telling us, oh, it broke a trend line. The daily did not close above. The 4 hour, 1 hour, they're closing down. Then we're retesting. So our focus should be only on sells, right? Look at that. Closes in our direction. Next candle down. Kind of like an hour of nothing. And then keep in mind, this is also London close. So volatility tends to die, but the structure continues. So just to recap that, the way I trade, and I want to show you guys, is that you can pick your bias for the day based on the daily and the 4 hour. Because look, based on all these candles, if price is going down, it's probably going to keep going down until it gets to a zone or a choppy area. Price, and this is actually a bad scenario because these look at this. It's kind of like trending but consolidating at the same time. See, that's kind of weird. We do our little trusty trend lines. Makes more sense. So think of this like ping-ponging up and down. Off each trend line is a high probability reversal. Think of them, they're literally, trend lines are just diagonal zones. So market structure, higher highs, higher lows, you want to trade with the trend. Lower highs and lower lows. And these are all kind of like criteria you can use and rearrange and whatever makes sense to you. So next week, what I want to do is actually want to take you guys through the simulator right here. And with this, we can literally play back market data from currency pairs. I can download, I think we can also trade gold too and other stuff. Data center. So we can go through literally all these currency pairs. I think some of the indexes, maybe gold and oil. But for purposes now, we're just going to focus on euro dollar. We can choose any account size, how much history won, and I can literally replay data and show you guys like literally at what time I would take a trade, how would I do it, and just get a feel for how I would show you guys literally how price develops. You would see the candles opening and closing, and I can change the speed. We're out of time for this workshop, but this is for next workshop. So I know this is a lot probably if you're new. I mean, when I first looked at charts, dude, I looked at this. I'm like, okay, there's all these buttons. I didn't know what I was looking at. I literally closed it and just went to go read a book. I'm like, this is too much. But it gets simple over time. Nothing you should really stress about. Just market structure, trends, price action, reactions. I'm actually gonna write that down here. Reactions. Make it look pretty black. And all it takes is just training your eyes. That's really the biggest part of trading. If you can train your eyes to see structure, see patterns. I don't like saying it, but it's really just patterns. Patterns repeat. And that's basically it. Patterns within patterns within patterns. That's what trading, that's how I see price. And it happens every single day. You can apply this to however you want. Higher time frame investing, say you're looking for stocks, look for stocks that are trading in an uptrend. Simple. That's what Garrett teaches. And guys, I highly recommend you check his workshops. He's really good at stocks, man. So that's basically it for this workshop. I'm going to actually put a screenshot of the charts we just looked at. I'm going to put this in the Slack as well. And also, yeah, one thing we're doing new this semester is, since we have the whole situation where we don't have necessarily in person, I have office hours. So if any time you guys have questions or anything, or you want to do more simulation sessions, we can literally run this whenever. So yeah, if you guys have any questions, dude, yeah, all up to you guys. Other than that, we're wrapped up. So have a good day, guys, and next week, see you guys.
Later.
Thanks, man.
Thank you.
Yeah, take it easy, guys.
You too.
Sweet. Of course, you're welcome, y'all. Oh, I did not answer your question. Oops. How much can the scale before you want to go into fix the market? Okay, I'll answer that. Stop sharing. That was dope. Whoa, why is it so zoomed in?